Greetings for the day. Myself, Professor Dhruti Jani, Assistant Professor at New LJ Commerce College. Welcome to another video of Valuation of Goodwill, that is first unit of Corporate Accounting of Semester 3. Before starting, let us revise first the methods for valuation of goodwill. Majorly, three methods are there: average profit method, super profit method, and capitalization method. All the three methods are further divided into other two methods. Average profit method is divided into simple average and weighted average. Super profit is divided into the purchase method by number of years and annuity method. And lastly, capitalization method is divided into average profit method and super profit method. Today we are going to learn last method of this chapter, that is capitalization method by super profit method. Let us first understand the theoretical part. The goodwill under this method is ascertained by capitalizing the super profit on the basis of normal rate of return. This method assesses the capital needed for earning the super profit. Let us see now the steps for calculating capitalization of super profit method. The first step is to calculate capital employed. It is calculated by using this formula: total assets minus total liabilities minus preference share capital, and lastly dividend in areas of preference shares. Step number 2 is to find out the amount of expected rate of return. It is calculated by multiplying step 1 or capital employed by expected rate of return. So step number 3 is to find out the amount of adjusted annual profit or future maintainable profit. We'll prepare two columns starting with average profit or weighted average profit, that is before tax. After that we will deduct interest on non-trading investment. Next minus tax, and lastly to deduct preference share dividend. So we'll get adjusted annual profit or future maintainable profit. Next, our step number 4 is to find out the amount of super profit. In simple terms, we can say it is a difference between step 3 and step 2, that is future maintainable profit and amount of ERR. And lastly, to find out the amount of goodwill by capitalization of super profit method, the formula for the same is super profit into 100 divided by expected rate. Now let us solve one illustration. The following is information from the Mansi's firm. Total asset is rupees 73,10,000, liabilities 11,90,000, 15% preference share capital amounted to rupees 6,80,000. Average annual profit before distribution of dividend is rupees 11,22,000, and lastly ERR is 15%. From the above particulars, find out goodwill by capitalization of super profit method. So we'll solve all the 5 steps, starting with step number 1, that is to find out the amount of capital employed. Formula for the same is total asset amounted to rupees 73,10,000 minus liabilities 11,90,000 minus preference share capital, that is 6,80,000, and lastly dividend in areas of preference shares, which is not given, so we will write dash or nil. So lastly, our final answer of capital employed amounted to rupees 54,40,000. Next, our step number 2 is to find out the amount of ERR. Formula for the same is capital employed or step number 1 into ERR. So 54,40,000 into 15%, ERR percentage is already given in the question. So step number 2 answer is rupees 8,16,000. Now next we will calculate our step number 3. We'll prepare two columns starting first with our average or weighted average. In the question they have already given us average profit amounted to rupees 11,22,000, that is before tax, minus interest on NTI, which is not given, so we'll write dash, minus taxation, tax percentage is not given, so we'll write dash, and lastly is our preference share dividend. Preference shares is already given, so in the bracket we will calculate by 6,80,000 into 15%, which will give us 1,02,000. So our final answer is adjusted annual profit or future maintainable profit amounted to rupees 10,20,000. Next is to calculate step number 4, that is super profit. It is difference between step 3 and step 2. In simple words we can say. So over here we'll write 10,20,000 minus 8,16,000 will get rupees 2,04,000. And lastly, to find out the amount of goodwill, that is step 4 or super profit into 100 divided by ERR. So we'll get 2,04,000 into 100 divided by 15. So final answer of our goodwill is rupees 13,60,000. This is the answer by using our last method, that is capitalization of super profit method. Let us solve one more example. Calculate the value of goodwill by capitalization of super profit method. Total assets amounted to rupees 28 lakhs, liabilities 8 lakhs, average annual profit 3 lakhs and ERR 8%. Let us first calculate our step number 1, that is capital employed. Total assets 28 lakhs minus liabilities 8 lakh minus preference share capital not given in the question, so we'll write dash, and lastly dividend in the areas of preference shares which is already not given, so we'll write dash. So capital employed is 20 lakhs. Step number 2 is to find out the amount of ERR. Step 1, or capital employed into ERR. So 20 lakh into 8% will give us rupees 1,60,000. Step number 3 is to find out the amount of adjusted annual profit or future maintainable profit. We'll prepare two columns, starting first with our average profit or weighted average, which is already given in the question, is rupees 3 lakh, that is before tax. Minus interest on NTI is not given, taxation not given, so we'll write dash, and lastly preference share dividend, that is 680 into 15% will give us rupees 1,02,000, amounted to rupees 1,98,000. Lastly, cut karo. Let us start with our step number 3 to calculate adjusted annual profit. We'll prepare two columns, starting with our average profit, which is already given in the question, is rupees 3 lakhs, that is before tax. Minus interest on NTI and taxation is not given, so we'll write dash, and lastly same for preference share dividend is not given, so our final answer for adjusted annual profit is rupees 3 lakhs. So step number 4 next is to find out the super profit. Step 3 minus step 2. 3 lakh minus 1,60,000 will get 1,40,000. And lastly, to find out amount of goodwill, and the formula for the same is step 4 into 100 divided by expected rate. 1,40,000 into 100 divided by 8. So we'll get rupees 17,50,000. So final answer of goodwill is rupees 70,50,000. With this, we are through with our all the 6 methods. In next video, we'll take some extra questions. Thank you all.